Hey guys, what's going on? So tomorrow is going to be one of the most important Wednesdays because we have the Fed meeting and we have a lot of earnings that dropped just after the market closed today. And we're talking about earnings of big companies in the tech, like tech giants, the FANGs, Microsoft, we have Google, we have Amazon reporting, and things seems to be a lot more better than expected. But we're going to see exactly how everything's going to unfold, and which is my personal view and take, and what I've been doing today, based on where my expectations are, following what we're going to hear possibly from the Federal Reserve, which could ultimately lead us to another run because the market will share up on the news coming up. But this is not, financial advice. Now, if you look at the market today, things were kind of, up and down until, maybe the later part of the trading session, just because I think people are waiting a lot on what is going to be the next decision, what the Federal Reserve is going to do, based on the interest rate decision for the month of July. Is it going to be another 75 basis points? Is it going to be 50 basis points? Is it going to be, 25 basis points? Is it going to be no more, increase on interest rates for the next foreseeable future? Just because when you look at inflation, it seems as if for the last CPI data we got in June, giving us the indication on how high inflation is, how high prices are for everybody in the US, it was pretty hot. But keep in mind that the reports that we see are lagging 1 month. So they are looking backwards. So not looking at the current reality, which leads me to think that because the Federal Reserve is looking at what is happening in real time, when you look at the price of all the major commodities that are playing, that plays a huge role, into the calculation of inflation, with the CPI, for example, you have energy being a huge component. You also have food. But if you look at, wheat, you look at, lumber for houses, you look at cotton for clothes, you look at energy, oil and gas. Not maybe gas, but oil definitely has been pulling back a lot. Right now sitting around maybe the 96. Yeah, 96. And just a few weeks ago, we were still at 120 or some change. So to me, it seems as if inflation is now going back down. And because of that, I'm part of the camp of people thinking that because of this, Federal Reserve is going to tell us, that they are maybe being less aggressive, so you can't really bet on that, right? Because you don't know exactly, but that's my expectation. I don't see, 100 basis points, maybe 1% or 1.5% as some of the people are thinking, so that is something that I'm looking forward to. The other thing to look at is, earnings. We have Amazon. We have Google, and you look after hours, Google is up 5%, Microsoft is up 4%, and Amazon is up 2.3%, which is a good thing. It's a good thing because the earnings that they just mentioned, as you can see here, Microsoft stock jumps, shockingly robust forecast calls for continued strong cloud growth. This is for Microsoft. Google stock rise despite an ad downturn, second earnings decline, but it's more important about the guidance, all right? What these companies are telling, or what the earnings are telling as a story around the current state of the economy and the future state of the economy, at least for the next couple of months. Now, of course, on Thursday, we're going to have, numbers coming from the GDP for the second quarter and telling us officially whether or not the U.S. economy has been entering or is entering a recession. Now, a lot of people think that whenever we hear about recession, it's a bad thing. No, it's part of a cycle, and we talked about this many times on this channel. Now, the thing is, the fact that these earnings are not as bad because these stocks are green after hours, it means there is something that the market or investors are seeing into these earnings, telling them that, hey, you know what? We've been more bearish than actually things were. And this is classical of the stock market. The stock market tends to overreact because when it comes to money, people tend to overreact. When it's time to, protect your money, they don't think twice. They take the money off the table. That's why usually, it takes less time for stocks to go down rather than, when they go up. Now, based on these two events, Federal Reserve, meeting, FOMC meeting tomorrow, I'm expecting them to not be as aggressive, actually having some good news for the market based on inflation numbers likely to be down for the next couple of months. And then earnings from the tech giants, not being as bad as we thought. So based on this, I bought the dip today. I bought the dip today on the energy. I bought the dip on crypto because I do believe if the news are coming from the U.S. Central Bank, from Jerome Powell, that, hey, you know what? Things are not as bad, or things are starting to cool off. And based on that, we're going to be, also monitoring, blah, 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 blah. Something along those lines, not increasing aggressively interest rate again. I believe, crypto is going to jump. And based on that, I bought a little bit, not too much. I bought just a little bit of, Ethereum again, some of the crypto miners, not a little bit, maybe, $500, just to kind of see how things will go. But pretty much all my money has already been invested for the last, 6 to 7 weeks. So that's why I'm not freaking out, because even though things from the FOMC are still not as good as we think, earnings are telling us a story that is quite different from what a lot of people were expecting 6 months ago, 3 months ago, 2 months ago. And based on that, I think the next bull market is going to start. We just have to be a little more patient.